It gives me great pleasure to welcome all of you to today's Integrated Business Solution paper organized by Board of Studies Academic. Students, IBS is very dynamic paper at CA final level where you have to integrate your knowledge across the CA final subjects as well as from costing and law area. Here you have to think holistically. Let me begin with a story. Imagine a time when getting a ride mean standing on the roadside, waving at passing taxis, negotiating fares, and often uncertainty whether a cab would even stop or not. For decades, the traditional taxi industry dominated urban transportation. Licensed operators controlled the market, fares were often very regulated, and the system, though widely used, was not always efficient or customer friendly. Long wait times, lack of transparency in pricing, and inconsistent service quality were very common challenges. Despite these issues, the industry remained largely unchanged, and established players felt secure in their position. Now, in one corner side of this industry, a small new player emerged. It didn't own taxis. It didn't follow the traditional model. Instead, it introduced a simple idea connecting riders and drivers through a mobile app. Initially, it targeted a segment. Please, it is very important to note that it targeted a segment that valued convenience over tradition. People comfortable using smartphones, willing to try something new, and looking for a more predictable experience. Industry experts were doubtful. Traditional operators dismissed it. This is not a real competition, they thought. This is the just a niche service. You have already studied this concept in your strategic management area. Niche market, where you have focus on a particular segment. Okay, what we just saw is the seed of what we call low end disruption. Low end disruption happens when a smaller competitor enters the market by serving overlooked or less prioritized area or customers that incumbents do not focus on. In the beginning, these services may appear limited or unconventional, which is why established players often ignore them. But over the time, the disruptor improves its offering, scale rapidly, and expand its reach until one day it redefines the entire industry. And yes, you have guessed it, the disruptor is Uber. Okay, Uber didn't start by replacing the entire taxi industry overnight. It began by offering a more convenient, tech enabled alternative, real time tracking, transparent pricing, digital payments, and driver ratings. Over time, it expanded into multiple segments, improved service quality, and scaled globally. By the time traditional players recognized the shift, the rule of the game had already changed. This the same disruption story is not limited to transportation. It is also applicable on various industries. You have a number of case studies available in your case study digest. Okay, today's case study is designed to promote higher order thinking by requiring you to analyze, evaluate, recommend practical actions in realistic business context. The case study has is a part of your module. This session is very interactive. You are encouraged to ask your question either in Hindi or in English. You may speak up or type your queries in your chat box. We have reserved last 15 minutes for your journal question and answer. This may include your examination related queries, preparation strategies, or other IBS doubts. Now, we are privileged to welcome CA Amit Rathod sir. He is a qualified chartered accountant with over 14 years of experience across offshore and client-facing roles, specializing in auditing and statutory reporting for Indian as well as overseas operations. Currently, at director at SN Dhawan and Company for Vis Nazars in India, he has successfully established a lead in talent audit hub and deliver over more than 50,000 audit hours and strengthen global audit delivery through strategic partnership and process standardization. With this, let us commence today's discussion and explore the case in detail. Sir, over to you.
Thanks a lot, Deepak ji, for introducing and welcome everyone. All the people who have joined us on YouTube or other online sessions channels. I mean, you all are welcome. And rightfully mentioned by Deepak ji, this particular exam, which is known as IBS. I mean, whenever I talk about IBS, I can recall those days when we were appearing for CA final and these kind of examinations were not there. In the real world, actually, the complexities of problem when you will be coming across a situation of consultancy or giving an advice to your customers or clients, always remember the customers are not finding problems on the basis of the subjects that we have studied, right? The outside world is a complex environment where the concepts, the content that we are grabbing our knowledge around, it is simultaneously worked from different domains, from different service lines. And the customers generally want a hybrid solution, a fixed solution. This kind of exams like IBS, they gives you that practicality. They give you that kind of an instances. They gives you that kind of an exposure to go through the situations that are being actually encountered by the real companies in the real environment. Just from the confidentiality perspective, we are not taking the names, but all the case studies which are provided in the digest, they are from a practical perspective. They are the real case studies in the open world. So this IBS exam is actually, from my perspective, is one of the very important exam because it gives you a practical insight of how the real world problems the clients are facing and how you need to resolve them with the hybrid kind of an opinion from different service lines or different domains. Okay, with this, we in our today's agenda, we are going to cover two case studies. We will cover one case study and then we will take a small break and then we'll come back with the second case study. This will remain the agenda. On top of it, a small suggestion from my side in relation to the IBS examinations. I mean, never ever appear in this exam thinking that this is a theoretical paper. I'm being very honest. The kind of complexities or the problems you will be encountering in the question paper itself, they are the real world scenarios. So this is a very practical exam, and don't consider that you are sitting in an examination hall trying to attempt or solve the case study that have been given to you. Try to understand or start behaving like a professional. When you are going through a case study, try to believe that this is a real world scenario where the case study is actually the client which is standing in front of you, and then they are telling you their problems, their situations that they are going through, and then they are asking all the questions which are given at the end of the case study. They are basically the kind of a situation or part of her business by herself in the initial stages. Remember, until the business is small, you can still manage these kind of situations on your own, like Sahana is trying to manage. But the moment you will get into the complexities or the business will start increasing, As an entrepreneur, as a founder, it becomes very difficult to control various aspects of business. We need to kind of understand that a business is not a small shop. Any business that we are talking about here, it's a business divided into multiple departments, which is departmentization is happening over there. So we have a clients and market, which is a separate kind of a department. We may have a procurement department whereby the raw material procurement is happening. We may also have a quality department, quality and inspection department, which may be helping the procurement or the purchase department very closely to ensure that the goods that we are kind of purchasing, they are of the up to the mark of the quality, the level of quality that we need. We will have a finance department which will be taking care of all this. There will be a people department who will be managing people, maybe an inventory and store department. I mean, a business is full of complexities. So as you will grow in the game, it will be very difficult for you to handle all these sub departments on your own. So considering the business expansion, this is what exactly we are speaking here. She was evaluating to hire a professional consultant who would support in all business matters, including taxation and accounting. Okay, so they need a professional consultant who can help them in taxation, accounting, and other business matters as well. She reached out to her old friend Madan, a practicing chartered accountant, to seek his help on accounting and compliance matters relating to the company. Accounting and compliance matters. What I'm trying to make a point over here is that please understand this is not only a general case study or a question that is given in the exam. This is a real life scenario where there is somebody who has started a business. Initially, they were managing the business on their own. As the business is expanding or growing, now they need professional consultancy, and then they are seeking your help. So let us suppose, just consider yourself as if you are Madan in this given situation, and you have started your own practice. So a client is approaching to you, thinking that you can help her with multiple situations that she has come across. So let's listen what Sahana has or struggling with. So Madan set up his own proprietorship firm and has been in the practice specializing in audit and taxation since 10 years. So it's a proprietorship firm, and from last 10 years you are operating in this particular industry. When Sahana contacted Madan for professional help, he was more than glad to support her. They met up at a coffee shop to discuss the details of the engagement. During the conversation, Madan tells her that times have changed and so have the ways of presenting accounts of any business as per the financial reporting framework. He explains how the preparation of the financial statements is now regularized in such a way where all such FS shall have a consistency, uniformity across the industry, with few exceptions, obviously, like specially regulated financial statements. So the chartered accountant Madan is now trying to explain Sahana that it is not that easy. Now the standardization, and it's not the standardization across industries only in India, but I'm being very honest to you, when we work in the global kind of an environment, we can clearly see that the standardization of the standards are happening or the gaps are happening across globe. So if there is a company which is preparing their books of accounts in, let us suppose, France, you can definitely compare those financial statements if they were being prepared in India with few gaps, right? So we can identify those gaps, and then both of those financial statements can be considered, can be taken for the by the stakeholders for decision making. So I mean that level of standardization is happening. So Madan is trying to explain Sahana that this is the kind of a situation that the current accounting or the reporting kind of a framework is working in. In addition, the users of these financial statements would also have an assurance of complying with basic framework. Okay, so there is an assurance that we need to provide. He also gives her an overview of latest changes in the income tax and GST, which could have an impact on her business. After a detailed conversation on accounting and taxation aspects, he asks Sahana to brief him about her business and the issue she is facing. Now he is asking that what is the exact issue you are facing. The meeting gets more formal as Sahana calls Murari. Now, who is Murari? Murari is an accountant who is working in her company, and now Murari is also sitting with Sahana, and they both are trying to explain the situation the company is going through. So they have a couple of issues, and those issues are being discussed with you. So now the client is there, client's accountant is there, and now you are sitting at a coffee shop and you are discussing the issues. So the first issue that has been brought up to you is issue number one. Sahana opines that Murari is now not computing the depreciation on the plant and machinery appropriately. So Sahana has an opinion that the calculation of the depreciation is not correct. So let's see what is exactly Murari has done while calculating the depreciation on the plant and machinery. So WDV of the plant and machinery is 30 lakhs. This means this is the opening balance. New plant and machinery purchased and put to use on 8th of June 2023. So this is a new machinery which is put to use on 8th of June. If you can recall in the income tax, then we need to clearly see whether the put to use is for more than 180 days in a particular year or it is for less than 180 days. So in this currently in this situation, we can see that this machine is there for more than 180 days in a year. There is another machinery which is purchased, but this is now put to use on 15th of December, which means this is put to use for less than 180 days. The value of this machinery is 8 lakhs. And then we have computer acquired and installed on 2nd of January, which is again less than 180 days. The value of the computer is 3 lakhs. Qualified for additional depreciation. So these two new machineries, they are considered as qualified for the additional depreciation of 20% as per the various government incentives or the income tax law. So whatever depreciation you will be calculating in the routine kind of an environment, you need to calculate 20% more depreciation on this. So when we are talking about depreciation, we should be very much kind of careful. If in the practical scenario in the real world, if you see what is depreciation is just an expense. What are we doing? Instead of recognizing the whole expense of an asset, of an accumulated kind of an asset which will give us benefit in the upcoming years, so we are not just kind of recognizing the whole expense in this particular year, because the benefit will belong to multiple years. So what happens if we are purchasing a machine of 100 rupees with 10 years of life? We are thinking that every year this depreciation, this machine is will be getting or depreciated with 10 rupees every year, which is like known as the straight line value method for depreciation. But you see, nowadays it is not, the accounting of depreciation is also not that simple. Now, if let us suppose in my example itself, it is not like that we are going to evenly divide the expense into 10 years. If we are talking about the depreciation, we need to definitely see that what will be the usage of that particular asset, how many hours of the useful life of this asset is having, and then for how many hours this will be used. I mean, things are getting little complicated. But on top of it, in the given situation, if somebody is asking you to charge additional depreciation, it means they are kind of giving you some more benefit, that current year's profit can be reduced with this much of additional depreciation. Instead of charging this to the upcoming years, you can charge this additional depreciation during this year and get some kind of a cost benefit, tax benefit as well. Now, this is not an additional benefit of 20%. It is just like preponement of some expenses which we would have incurred in the normal routine in a later kind of a year. So it is just, you can say, like the present value or the difference, or maybe the risk-free rate of interest that you are able to generate on the tax saving of this additional income. That is the true benefit that you are able to going to get realized out of this situation. But yes, in this given situation, you can charge 20% extra depreciation. But again, we need to be careful, because there are two assets. One is put to use for more than 180 days. So we can definitely charge 20%. But the other is there for less than 180 days. So obviously, the depreciation will be charged 50% only on that asset. We will see the calculation as well. As per Murari's working, the total maximum depreciation on machinery 15% comes to 8.7 lakhs, and on computers 40% comes to 1.2 lakhs. So, like 40% of 3 lakhs, there is a direct kind of a hit which they have taken. Obviously, I mean, this doesn't seem right, correct, because the computer was purchased and put to use for only for less than 180 days. So we'll see the calculation as well. But yes, the first issue the client is facing, we can clearly see that the depreciation is not calculated accurately. Issue number two. On 1st April 22, Shah Fashion Limited acquired 100% Spun Limited for 5 lakh rupees. So there is another company, and now this company has become our wholly owned subsidiary because we have acquired 100% of Spun Limited, which was into cotton spinning business. The fair value of the net identifiable assets of Spun Limited was 4.5 lakhs. So when we are acquiring a company, we need to do the revaluation or fair valuation of the company's asset. So the net identifiable assets, they were 4.5 lakhs, and goodwill was 0.25 0.5 lakhs. On 31st March 24, the government changed its policy on textile sector, having adverse impact on business of companies like Spun Limited. Okay, so we acquired a company whereby the goodwill was 0.5 lakhs in the acquisition, and the valuation of the assets was 4.5. It means we must have paid 5 lakh rupees. You see, it is already written 5 lakh rupees. 4.5 lakh rupees of net assets were there. Net assets, remember, this is the asset minus liability. So net assets we were able to acquire is 4.5, that to their fair value. And then at the end of the day, what happened? The additional amount that we have paid is 0.5 lakh. It is considered as goodwill. I'm pretty sure that you are aware that only goodwill against which you have made or paid a compensation or made some payment is what you can recognize in the books. Self earned goodwill, you just cannot do a fair valuation of self earned goodwill and recognize in the books. That's not allowed. On 31st March 24, the government changed the policy for the textile sector, and it is having an adverse impact. So it is, if you have gone through the kind of material that is provided by the institute to you, you know that this is one of the indicator of impairment as well. If there is a change in the policy which is impacting your business, we need to do an assessment whether this can lead right to the impairment of the existing asset base or not. Internal discussion on government policy indicate. Now this is assessment. This whatever indications are there, we have actually got this indication out of the assessment that we have done. So internal discussion on government policies indicate that revenue of Spun Limited is estimated to fall by 20% in coming 3 to 5 years. It means adverse impact is there. So the assets that we bought, 4.5, and goodwill was there. I mean, obviously the same situation is not there. In other words, if you let us suppose before this policy change, the government changed the policy. Before this policy change, if there was a customer who was ready to pay 5 lakh rupees for to Spun Limited, this kind of a business, they may, after the change in the policy, they may not be interested in paying the equal amount, right? And if they are not able to or willing to pay the equal amount, it means there will be an impairment that will happen, because the reduction in the assets that is happening now is going to be more or faster than the normal scenario of the business. That's what the impairment is basically: sudden loss in the value. Okay. So the revenue will be, and you see the future valuation at times happens on the revenue. We do the present value factor, I mean, use the present value factor, and we discount the future revenues as well to come to a valuation. So if future revenues are also going to reduce, then the obviously the valuation of the company is also going to reduce. The adverse effect on marketplace and strict regulatory conditions indicate impairment. Or you see, the question itself is saying that there is an impairment indication. As a result, Spun Limited has to estimate the recoverable amount of goodwill and net assets on 31st March. So they purchased 2 years before, remember, on 1st April 22. So it means that the assets that they purchased 4.5, they must be depreciated by now. By 23, they must have been depreciated. But on the end of 24, a fair valuation has to be done. And if the fair valuation is less than the carrying value of the assets, then that the difference will be booked as impairment. Right? Saha Fashion Limited uses straight line depreciation. The useful life of Spun Limited assets is estimated to be 15 years with no residual value. So they were thinking that the Spun Limited's assets, they will remain there for 15 years. So the company was must be planning like 4.5 is the total assets. So they must be providing 4.5 divided by 15 years, which comes around 30,000 or something per year as a depreciation. Further, no independent cash flows can be identified to any individual assets. So it means there is no set of assets which can be considered as like a group which is generating revenue. They are known as cash generating units in the accounting CGU. Because what happens at times in a given business, there might be some. I mean, let us suppose we are talking about a CA business, right? CA's practice. What is happening in the CA's practice? There are multiple service lines, so all those service lines can be considered as a CGU, a cash generating unit. Like audit is a CGU, audit is generating revenue. Then taxation is another CGU. So if there is a company which wants to, let us suppose, sell their business, but they don't want to sell the company, they can sell that particular CGU as well. Like they just can pick up like the audit practice and they can sell that audit practice in the market, right? So we need to see if a CGU exists, then that CGU's valuation can be separately done. I mean, it is not like the each asset of the company has to be valued. We need to value the CGU, right? A fun fact over here, what I can recall while going through this particular case study, like if you know or you must have heard about Accenture, right? Accenture was a CGU of Arthur Anderson. And what happened in 2002, we all are aware that because of the economic recession or those kind of policies, and then the Lehman Brother and those, I mean, property market crisis and all. But this Lehman Brothers thing, when happened, the Arthur Anderson, it was not able to survive. So the big five became the big four. That was the kind of an impact. And the one of the CGU, the cash generating unit of Arthur Anderson, got split from Arthur Anderson and is known in the market as Accenture. And that's just a fun fact, but yes. So further, no independent cash inflows can be identified to any individual assets. So the entire operation of the Spun Limited is to be treated as a cash generating unit. Okay. So this is a CGU. So in the given situation, what is happening? Maybe in other words, you can also consider that if you're going out in the market to try to sell the individual assets, maybe there are no buyers or the valuation is not being considered accurate. So the individual assets are not making any sense to be sold in the open market. So what are we doing? We are selling the whole business as a one go. And that's what is CGU is. Due to the regulatory entangle, it is not possible to determine the selling price of Spun Limited as a CGU. Its value in use is estimated by the management at 3.02 lakhs. Now you see the value is 3.02 lakhs. So we spent 5 lakh rupees to purchase an asset, and then the current value is 3.02 in 2 years only, right? While we were assuming that 15 years of the life will be there. So we will see that how much is the impairment that we need to recognize in the books. That's the second issue. So the first issue was depreciation. Murari might have calculated wrong depreciation. The second issue is about the Spun Limited. So we purchased this company. Now there is an issue number three as well, which the team is going through. Your client is facing. This is that Mr. Geet was appointed as the new managing director of the company. So there is a person known as Mr. Geet who was appointed as the MD of the company. MD means the executive director, somebody who is working, who is performing a kind of a participating in the daily operations, daily business of the company. So there is a new managing director known as Mr. Geet. He was appointed on in October 23. In place of Mr. Suresh, the company decided to pay remuneration to Mr. Geet as per Section 197 of the Companies Act. Mr. Baman now, so in place of Mr. Suresh, Mr. Geet was appointed. What is happening? Mr. Baman, who is one of the member of the company, wanted to inspect contract of service entered into by the company with Mr. Geet. So there is a member, remember, a member is there who wants to inspect, right? He may have some doubts or just to see that what is the compensation, what are the terms of appointment. This Mr. Barman wants to inspect the contract of service entered into by the company with Mr. Keith for assigning him the office of the managing director. But he was denied to have such inspection on the ground that the contract with Mr. Keith was not in writing. So Mr. Barman, he was not given access to this particular contract, and then he was told that this is not in writing, so we can't show you. Okay, this clearly shows. I mean, a contract with such a managing director, such an important person, not having something in writing is something which is suspicious, which is fishy, and which is not allowed. Even in the corporate, even you will join somewhere or you will start giving your consultancy somewhere, the first principle that we follow in the corporate is known as not documented, not done. So if you can't show that it is done, whatever you are telling, it is making no sense. I mean, in the corporate, we continuously kept on saying that please don't tell us, show us, because if it is not documented, it is not done. So this is the issue number three, whereby Mr. Baman, who is the member of a company, he was rejected by the company that we will not show you the agreement which they, the contract which they entered with the managing director known as Mr. Keith. That's the third issue. Now we are entering into the issue number four. In the issue number four, the company says that that company at the annual general meeting held on 30th of September 21 appointed Ghana as a non-executive director. Now, who is a non-executive director? A person who is not participating in day-to-day operation of the company. Okay, he might not be paid the compensation as well. He may be charging the sitting fees or those kind of compensations only for the time that he is spending, but he is not on a payroll. There is no regular contract. He is not participating on day-to-day activities, and that's why he is known as non-executive director. So in the first issue number three that we just discussed with Mr. Geet, he was the managing director. So he was an executive director, but Ghana is a non-executive director on the board of the company for a period of 3 years. In September 21, this Ghana was appointed as the NED for 3 years. On 2nd October 21, okay, this is, I mean, only after 2 days, Ghana met with an accident and died on the spot. It's a sad news. There was an accident that happened with a new non-executive director that we appointed. Now, the board of directors of the company on 16th of October, after a couple of days of death, they have appointed a hero to fill the casual vacancy so created. Now, appointment of hero was made for a term of 3 years by the board unconditionally. The next AGM was held on 29th of October. So, in the given situation, there is a casual vacancy because of an kind of an accident that happened, and the board has filled that casual vacancy by appointing another director, right? And the next AGM is on 29th of October. So, question may be asking that whether the appointment is correct or not. We will see what kind of question will be there after this. Then we have an issue number five, which goes like, besides company related matters, Sahana asked Madan to advise her in her individual tax matters too. So the four issues that were there, they were company related, but there is another a tax matter which Sahana is asking Madan to help her with. Now she is planning to buy a residential flat for her own residence. So Sahana is buying a flat which is priced at 48.5 lakh rupees. This is the contract price. This is the purchase price of this particular flat. The person selling the flat Rainbow is a NRI as per the provisions of the income tax, and he will be visiting India to execute the sale date. So there is a person who is known as Rainbow. This person is an NRI and he will come to India only to execute the sale deed. So it means Sahana is purchasing a property worth 48.5 lakh rupees from an NRI. After the title gets transferred, the flat will be renovated with a total cost of 60 lakhs approximately. You see, the flat's value, the price is 48.5 lakh rupees, while Sahana is ready to invest 60 lakh rupees on the renovation. Madan was quite astonished when he got to know that the renovation cost is more than the purchase price of the flat. Sahana informed Madan that she is purchasing the flat due to her father's emotional attachment with the locality and evaluating to finalize the contractor for the renovation work to make the interiors as per her liking. So she is saying the flat is having a low value because it's not like an investment or a flat that she is willing to purchase on her own, but this is an emotional decision that she is taking because of some attachment. So that's why she is purchasing this flat. But even if is purchasing this flat, she want to renovate this flat as per her liking, and that is going to cost more than the purchase price of the flat itself. I mean, such a different situation this is to make the interiors as per her liking. Apparently, Murari informed her that there would be not be any compliance under the income tax towards flat purchased and proposed renovation. So Murari, who was the accountant, I mean, he suggested Sahana that there will be no implications or there is nothing, no compliances under the Income Tax Act. While remember, there is a purchase of the property from an NRI and simultaneously a contract which is of 60 lakh rupees. She's planning to give somebody who can renovate the flat. So this is the case study overall. If you see if you look into the the complete case study, there is a business which is started by Sahana and her father, and then Sahana has appointed an accountant as well known as Murari. You are Madan in the case study, a professional proprietorship owner, and you are a practicing chartered accountant. You are specialized in audit and taxation. There are five issues that Sahana has come up with uh, to you. The issue one is in relation to the property, plant and machinery. Sorry, not property, but plant and machinery, and the depreciation, calculation of depreciation on this plant and machinery. When the income tax is allowing additional 20% of depreciation on the plant and machinery. The accountant has already calculated the depreciation, but Sahana is thinking that this is a wrong calculation. The issue two is related to the purchase of a company, one of the wholly owned subsidiary, which can be considered as a cash generating unit because when we are selling their assets one by one in the open market, it is not fetching equivalent value if we are selling this particular business as it is. It means though all assets combinedly they are able to generate a business. So selling a business is making more sense. That's why it is a CGU. So it was purchased, and when it was purchased, a change in the government policy adversely impacted, which is a kind of an indicator for impairment. So the question says that we paid 5 lakh rupees, 4.5 lakh was the net assets, and zero point 0.5 was the goodwill. And 15-year was the life that we were thinking with a SLM kind of a depreciation method. And the current value of the CGU is 3.02 lakhs. It means second issue is related to the impairment. Issue number three, when we are discussing, this is about appointment of a new managing director, which is an executive director, Mr. Geet, and there is a member who wants to inspect the contract, but company is not allowing, saying there is no written contract. That's the third issue. Fourth issue is about the casual vacancy because of an accident. There was a person who was appointed, but uh, there is a situation which we need to deal with. So board of directors, they filled the casual vacancy with another director. And because of this, the question may ask whether the treatment of filling the this particular casual vacancy, and then they actually did it for the remaining 3 years. So can they do it, or should it be done for the remaining period? So when a casual vacancy is being filled, it is filled only for the period that is remained. It cannot be a new contract of 3 years or something. So I mean, this is the kind of a practical situation that we may come across in the question. And then the issue number 5 says that there is a purchase of a flat from an NRI, and simultaneously a renovation contract which Sahana is planning to give to somebody with 60 lakh rupees, right? So these are the kind of 5 issues that the client has come up with. Now you need to deal one by one with all these questions. Okay. Remember, I mean, that's what we were saying, that this is a kind of a complex situation. The client will never come with only one kind of subjects questions. When the client will sit, it is not like that they will be asking only questions related to income tax or only questions related to audit or accounting. They will just tell you that these are the complexities, situations that they have come across, and those situations can be a combination, it can be a hybrid of multiple subjects, multiple service lines. So we need to be very vigilant. A suggestion from my side is that in the examination hall, you may not have enough time to go through the case study again and again. So there is a concept which is kind of implemented by the Tata Group, which is known as first time right. So I will recommend that you guys should follow this first time right concept, which means that you you need to spend first time. I mean, you need to make things right in the first time itself. When you are going through the case study, try to go through the case study in such a manner that you need not to go through with the case study again and again. If you think you tend to forget the kind of like so many parameters, so many attributes given in the question, that keep making notes, make a summary, or keep highlighting in the question paper itself, so that when you are going through the questions, you can immediately reach out to the important or the exact points of the given in the case study. Okay. I mean, you will not have enough time to go through the case study again and again. Every time you are going through a question and you are going back to the case study to understand where this particular issue was. Not in all case studies these issues will be given like this. I mean, this case study is really helpful because all the issues are categorized in these kind of 5, uh, uh, I'll say, paragraphs. But generally, it is not there in the case studies. It's just like the client will keep on telling you that what is happening, and then you need to find the right kind of a content or the right kind of a situation or the problem that the client needs a solution around. Okay. I mean, in the practical scenarios, at times we come across this situation that identifying the problem is itself a very big problem. Identifying the right root cause or right problem that the client is sitting with you itself is a very big problem. I mean, we face challenge to that extent, to that level. Now we are entering into the question and answer kind of a segment. So as you know, in the case studies, there are generally two types of questions. This is the pattern. We have multiple choice questions as well, and then simultaneously we have descriptive questions as well. So first of all, let's go through the multiple choice questions before reaching out to the descriptive questions. So the first question, the question is asking, it's a multiple choice question. The question is the maximum depreciation allowable under Income Tax Act 1961 calculated by the Murari correct? Yes or no? So while going through the question itself, we realized that the calculation was not correct. Like, to give an example, like computer was depreciated with the 100% of the depreciation. I mean, not 100% of the value, but 100% of the allowable percentage. Okay. While we put to use the computer only for less than 180 days. So it should be 50% of what is allowed, not the 100%. So we need to, the no is the correct answer, but what will be the correct value is something that we need to calculate. So I'll show you quickly how to calculate this value. I mean, even though you need not to kind of uh, make this solution or this calculation as part of your answer, because already it's a multiple choice question, so you only need to do a tick mark. But in your rough or wherever you want to do a calculation quickly, a kind of a quick calculation is required. Okay, so you see, the company was having a WDB, if you can recall, 30 lakh rupees. And then we purchased a 20 lakh rupees of our machinery, which was put to use for more than 180 days. It means the opening and this plant and machinery, this all will be depreciated with the complete 15% of our depreciation. The 15% is the rate. So the first normal depreciation is 15% on 50 lakhs, which is opening plus new purchase. 7.5 lakh is the plant and machinery's depreciation. Now the second machinery that we purchased is of 8 lakh rupees, but it was put to use for less than 180 days. It means we will calculate only 50% of the allowable percentage of depreciation. So 15% is the depreciation that we are claiming on plant and machinery. So we can charge only 7.5% for this year on 8 lakhs, because the put to use is less than 180 days. So this is 0.6. Then we have the additional machinery that we have purchased, or sorry, computer we have purchased. Remember, computer cannot be depreciated with 40, because again, it is put to use for less than 180 days. So the depreciation rate will be reduced by 50% or to 50%, which means 50% of 40%, that is 20% on 3 lakhs. So 0.6 lakhs is what we can claim on this amount. Additional depreciation, as the machinery was allowed to have additional depreciation of 20. But this is only new machinery, remember. We cannot allow this additional depreciation on the WDV, opening WDV. 20 lakh is the new machinery that we have purchased. So we will give 20% of 20 lakhs new machinery as the additional depreciation. The second machinery is also eligible for the depreciation, additional depreciation, but that is put to use for less than 180 days. So we will not charge 20%, but we have to adjust with 50% of 20%, which is 10%. So on 8 lakhs, 10% is 0.8 lakh. This is the, so 4 lakh and 0.8 lakhs. This is the additional depreciation on the new machinery that we have purchased. This is the depreciation on the WDV and the additional machinery which is put to use for more than 180 days. And this 0.6 is for less than 180 days. 0.6 is the amount that we calculated for machine computer basically. So the total depreciation is 12.9 plus 0.6, which means 13.5 lakhs. Okay. So we'll see in the multiple choice questions, the answer is 13.5 lakh is the C. So we will simply take on the C. I mean, you need not to do a fair working for multiple choice questions. You can do a immediate kind of a quick working, and then you can provide your answer. You have to be very clear and careful while you are writing a descriptive question, because then whatever the content you will be writing, it's not only the content that will be given marks to, but it is also the presentation, the flow of content. Everything will will have an impact on the total marks that you are going to get in the exam. So I humbly request that all these case studies that are already available in the digest, please start going through with them. Please start at the end. I mean, how to write the answers of the descriptive question is something that we need to learn. Okay. And we can definitely have an approach which I discussed last time. I can give you some more guidance around it. But first, let's cover up this multiple choice question. So first question we have covered, it is 13.5 lakhs. Now we are moving to the second question. The second question is, what is the amount of impairment? Okay. So Spun Limited, if you can recall, we purchased this. Now we purchased it in the 4.5 lakhs with 0.5. But remember, we purchased it 2 years before. It means 2 years of depreciation should also be in there, right? And then we are only able to fetch 3.02 lakhs of total market value of the CGU that we are operating in. So the question is asking, what is the allocated? How the same should be allocated in other assets? The other one ways that we can do the proportionate, I mean, in the value of the asset and the goodwill. Third can be like we can do it with the assets first, and then if there is anything left, then we will move to the goodwill. So this kind of confusions can be there in the question examination hall when you will be going through such questions. But the correct answer is that we need to adjust the impairment with the goodwill first. As I told you, goodwill can only be there in the books if you have paid for it. And if there is an impairment that is happening around the CGU that you have purchased, then that adjustment of impairment should be done with the goodwill as the priority. Okay. So let's see how much is the kind of an impairment. So in the given question, if you see the historical cost, goodwill is 0.5 and other asset is 4.5. We have paid 5 lakh rupees. So the value of the CGU is 5 lakhs, which is there with us. Okay. Now you see, since I told you this was purchased 2 years before, so the 2 years of depreciation should also be calculated. So if we have 4.5 lakhs of assets and the life was 15 years, so we can do 4.5 divided by 15, and 2 years of depreciation is this much, 0.6. Now, what is the carrying amount as on the closing date or as on the balance sheet date? So the goodwill is still in the books. We have not impaired goodwill in any manner. We have not amortized goodwill in any manner till this time. So the value is, the carrying value is same. The assets are depreciated. 3.9 is the carrying amount. So the carrying value of the total business, or I will say the CGU in the books, is 4.4. Now we can only realize 3.02, which is the kind of a net asset value of this CGU at the end or at the balance sheet date. So the total loss, the impairment loss that we have is 1.38. How we have calculated it? That carrying amount is 4.44, which is visible above as well. And then simultaneously, we can clearly see that the recoverable amount is only this much. So we have reduced this from this amount. This is not 3.2, this is 3.02, if I can recall correctly. So if you reduce these both, the answer is 1.38. Now we have to charge a loss of 1.38 in the P&L, and then we have to kind of adjust this impairment from the carrying value of the assets. In the CGU, we have two types of assets. One is goodwill, and the other one is your other assets. So, as I told you, the first impact will be done with the goodwill. First of all, we will impair the goodwill because goodwill is an additional amount that we paid. So, if 1.38 lakhs of impairment is to be recorded, we will adjust 0.5 from the goodwill. So, goodwill's carrying amount or the closing value will become zero in my books. Now there is no goodwill because the business is impacted already by the adverse policy or change in the policy of the government. So when something is already adversely impacted, I mean, people will never be ready to pay for the goodwill, and that's why the first adjustments of impairment is always happening from the goodwill amount. We will do this. The second is the other assets. So after doing 0.5 lakhs of impairment from goodwill, we can see that what is happening, the other assets are only available for the remaining impairment amount is 0.88. So we will impair this, the other assets, for this particular amount, and whatever the difference of 3.9 and 0.88 is, that will become the carrying value, which is exactly uh, equal to the closing value of the CGU, which was given in the question, that is 3.02. So this is how we do the impairment analysis as well. So when the answer is your 1.38, then the we'll see the option in the second question. 1.38 is given in B and in D, but what is the difference? That the impairment loss is 1.38, and the same should be allocated to goodwill and other assets proportionately. I was telling you that generally this is kind of a confusion that people come up with, but since goodwill is something that we need to impair first, the correct answer to this particular question is D, which is impairment loss is 1.38 lakhs, and the same should be allocated first to goodwill and then the balance to all other assets, which we have seen in the solution as well. Okay, I think some noise is coming. Somebody's saying something. Okay, we can move to the next question. The next question is regarding the request of Mr. Baman. If you can recall, Mr. Baman was a member and he wanted to inspect the contract. And I told you that not documented means not done. So this is not allowed. But the question has given you three options, and the question is asking that what are the statements which are incorrect. So regarding the request of Mr. Baman to inspect the contract of services entered by a company with Mr. Geet, identify the incorrect statement out of the following. So we need to identify the incorrect statement. The first statement is such contract of service shall be kept at register office of the company. This is true. It has to be there. Second says member may inspect the contract free of cost. This is true. You see, the same thing that I discussed. Now moving to the fourth question. So the fourth question says, considering the facts in issue number 4, the appointment of Hero as a director of the company, valid. Now the issue number 4 was about casual vacancy. So there was a casual vacancy which was a kind of created because of the accident of one of the director. And I told you the issue is basically that in that situation, the board of directors appointed or filled the casual vacancy. So they are allowed to do it. There is no doubt, but they cannot do it for the 3 years because they can only do it for the remaining period for which the original director was appointed. And then simultaneously, there is another thing that they need to get this approved in the next general meeting. Okay, so this is what law says. So we will see that what are the options that we have, which is giving us the same kind of an answer. The first one says appointment of hero by directors is not valid. So this is not correct. Is valid, okay, but should be approved by members. This is exactly what we are saying. Appointment of director is valid as the approval of shareholders is not required. Again, this is wrong. Appointment of hero by a board of directors is not valid as the director cannot be immediately appointed. This is also wrong. So the correct answer is B, which is appointment of hero by a board of directors is valid but should be approved by members in general meeting held on 29th October. Okay. Now, how to fill the casual vacancy? This is giving you some explanation. Again, I have already told you, but I will still go through this particular reasoning to give you more insights. So, casual vacancy says that according to this section, if the office of any director appointed by the company in general meeting is vacated before his term of office expires in the normal course, the resulting casual vacancy may, in default of and subject to any regulations in the articles of the company, be filled by the board of directors at a meeting of the board, which shall be subsequently approved by the members in the immediate next general meeting. So it has to be approved in the next general meeting, but it can be filled by the board of directors. That is the first point. Second says any person so appointed shall hold office only up to the date up to which the director in whose place he is appointed would have held the office. This is exactly what I was telling, that the board has no right to appoint the casual or fill the casual vacancy for 3 years. Okay, they can only appoint for the remaining period. The next question, multiple choice question is Sahana not required to comply with any provisions under Income Tax Act 1961, considering her individual tax returns are not subject to audit under the provisions? So even if Sahana's books of accounts, personal books of accounts are not subject to audit, but still there are two transactions that Sahana has entered into. First is purchase of a property of 48.5 lakh rupees, if I can recall correctly, that too from an NRI. Okay. And the second is Sahana is engaging a contractor to do the renovation of the house. The amount is 60 lakhs, which is also higher. So, what happens if, in case, first of all, if in case you are buying a property, then you have to deduct the TDS. You are kind of giving a contract which is more than 50 lakhs, then also you have to deduct the TDS. So it is not like there are no kind of compliances from by the income tax that the Sahana has to do. So the answer is wherever the TDS is something that we need to deduct is the correct answer. So TDS is required to be deducted under section 195 on purchase of property, and also TDS is required to be deducted on contract work of renovation as the contract value is rupees 60 lakhs. So I told you in both the cases the TDS is to be deducted. Why 195 and 194 IA? Why not this one? Because the person from whom the asset is being purchased, the property is being purchased, is an NRI. Okay. So we will go through the reasoning to have better understanding. The answer is TDS is required to be deducted under section 195 on purchase of property, and also TDS is required to be deducted on contract work of renovation as the contract value is rupees 60 lakhs. Now what is the reason? The reason is Section 194 IA requires every transferee responsible for paying any sum as consideration for transfer of immovable property to deduct tax at the rate of 1% of higher of consideration and stamp duty value. So 1% of the consideration or stamp duty value, whichever is higher, at the time of credit of such sum to the account of the resident transferor. Remember, 194 IA is for resident, or at the time of payment of such consideration to the resident transferor, whichever is earlier. So either the amount is credited, which is means let us suppose the accounting entry is happening, or when you are paying this. However, no tax is required to be deducted where the consideration for transfer of an immovable property and stamp duty value of such property both are less than 50 lakhs. The amount for less than, remember it was 48.5 lakhs. Okay. The question is saying if it is less than 50 lakhs, you may need not to. The point is basically this is when you are buying it from a resident. When you are buying it from an NRI, the provision of 194 IA they are not applicable, and the provisions of 195 they are applicable. So TDS is required to be deducted under 195 on purchase of property as payment is to be made to a NRI, and also TDS is required to be deducted on contract work of renovation as the contract value exceeds. So this is the correct kind of a answer. So if it would have been a case of a resident kind of a seller or buying from a resident of India, then maybe the time of buying property, the taxation wouldn't have been applicable, TDS wouldn't have been applicable. But still, when you are giving this particular contract, you were supposed to deduct TDS and deposit it to the government, which can obviously later on be claimed by the person against who you have deducted the TDS. So these kind of multiple choice questions can be there. Now we are moving to the descriptive questions. Okay. So let's see what kind of descriptive questions are there. The first descriptive question says Sahana is intrigued by the concept of impairment and wants to understand if an asset once impaired, can it be reversed? In this context, explain in brief the accounting for reversal of impairment, source of information which indicates reversal of impairment loss. You see, the uh, the guidance, obviously, the standard says that you can reverse the impairment which you have done. Exceptionally, it happens. In the given situation, like for Spun Limited, the impairment has happened because of the change in the government policy. What if there is a positive impact? So let us suppose after a year, 2 years, the government is changing the policy again, and this is putting a positive impact on the business of Spun Limited. If that will happen, the reversal of impairment is allowed. But reversal of impairment to an extent, to the carrying amount, the moment you are reversing that particular kind of a impairment, it is only allowed to an extent to which the impairment was booked earlier. Okay, or to the carrying amount of that particular asset if that asset would have not been impaired. So whatever the carrying amount of that particular asset would have been there, if the impairment would not have happened, that is the only amount which is allowed to reverse. Okay. And what are the indicators of reversal of impairment? They are exact opposite the impairment indicators, right? So whatever indicators of impairment indicators are there, whether they are financial, I mean economical, or basically the regulatory changes, that all the reversal of that is exactly the indicators of reversal of impairment loss. I mean, like if an adverse impact of the change in government policy is there and as an impairment, then reversal of impairment is basically a positive impact of the change in the policy of the government. Okay, let's go through carefully about the answer or the of the solution. So the first answer is accounting for reversal of impairments. Paragraph 110116. The increased carrying amount of an asset other than goodwill attributable to a reversal of an impairment loss shall not exceed the carrying amount that would have been determined had no impairment loss been recognized for the asset in prior years. If the asset would have continuously kept on depreciating, then whatever the value of that asset would have reached the moment you are trying to reverse the impairment is the highest. Till that level you can do the reversal of impairment. Any increase in excess of this amount would be a revaluation. So what is happening? If you are trying to, let us suppose you are trying to reverse the same amount which you claimed as an impairment in the previous years. Now what is happening? The depreciation's value, the assets value. So let us suppose in our example, if we are doing the reversal of impairment after 10 years, the carrying value would have been much lower. But let us suppose we are saying that we will do the same impairment reversal. Then what are we doing? Actually, it is not the impairment reversal. We are revaluing the assets and we are booking the excess. I mean, it is the fair valuation of goodwill. You must have seen recently what is happening with the Vodafone Group and all. I mean, that is all over the news. But over here, what is happening? Any excess of the amount would be a revaluation and would be accounted for under the appropriate standards. Second para says a reversal of an impairment loss for an asset other than goodwill is recognized immediately in the profit and loss unless the asset is carried at a revalued amount in accordance with another Ind AS. Any reversal of an impairment loss of a revalued asset shall be treated as a revaluation increase in accordance with that other Ind AS. Then the last para is a reversal of an impairment loss on a revalued asset is recognized in the other comprehensive income and increases the revaluation surplus for that asset. It is if you are trying to book more value than what you impaired earlier. However, to the extent that an impairment loss on the same revalued asset was previously recognized in the profit and loss, a reversal of that impairment loss is also recognized in the profit and loss. Okay, so whatever loss was there that you recognized in the as an impairment in the previous year, that will route to the P&L. After a reversal of the impairment loss is recognized, the depreciation charge for the asset is adjusted in the future periods. I mean, now the asset is again to the actual value. Okay, so now this carrying value will be given an impact for the remaining period. So if you, let us suppose in our example, we reached out to a carrying value of 3 lakhs. So we are depreciating the 3 lakhs for, let us suppose, remaining 13 years. But if in the case that 3 lakh after 5 years, we are again revaluing and let us suppose that becomes, the answer is to be given in kind of these descriptive questions. The next kind of a section of this particular question was asking what are the indicators of reversal. So I told you they are the exact opposites. Whatever the indicators of impairment are there, if those impairment indicators are in your favor, then you can say they are the indicators of reversal. but we will quickly go through that. What are those? So there is an observable indication that the assets value has increased significantly. I mean, okay. So if there is, you have an indication that the assets value has increased significantly, the asset which you depreciated earlier, and this can happen because of the change in the policy or because of XYZ reasons. Significant changes with a favorable effect on the entity have taken place during the period, which can be because of the technology. Recall, like all those edutech industries, they were having a lot of favorable policies, or I will say an environment. So they were quickly kind of getting valued higher than what they should have been. To be very honest, I mean, this is what a feeling in the market was. Or I can give you a better example, which may be like a dot-com bubble. What happened at that moment, right? So it was a clearly a gap in the revaluation methodology, but people started thinking that the higher of the valuation is something that they are deserving. So at times we need to be very, very careful when we are talking about the technology, market, economic or legal environments, and two, when we are doing an assessment, whether a reversal can be there. Okay. Market interest rates or other market interest rates of return on investments have decreased during the period. Okay. So if they are decreasing, when you will be doing a discounting, it will be in your favor. So you can definitely do a impairment reversal. These are the some external resources. What are the internal sources? The significant changes with a favorable impact on the entity have taken place during the period. Evidence is available from internal reporting that. So these are some internal sources. Now, next question. Sahana wants to know if her company missed some invoices while claiming GST ITC. So let us suppose they didn't fill some invoices in the return. So now, till what time the ITC can be claimed? So ITC can be claimed till the time you will be filing your annual return. Once you have filed that return, then the ITC will not be allowed. She believes the same may be taken till filing GSTR 3B return for the month of March of the concerned financial year in her appropriate. So it's not like the for the month of March, but it is the annual return filing date, okay, which is somewhere in the November. So let's see. The answer is saying that a registered person is not entitled to take ITC in respect of any invoice debit note for supply of goods or services or both after the 30th day of November following the end of the financial year to which such invoice debit note pertains or furnishing of the relevant annual return, right? So there is a date 30th November, but if you have filed your annual return before this date, then only till that time, okay, you cannot claim after that. Thus, in accordance with the above provisions, the view taken by the Sahana that ITC of missed invoices may be taken till filing GSTR 3B return for the month of March of the concerned financial year is also not correct. The ITC of missed invoices can be taken till 30th day of November following the end of the financial year to which such invoices pertains or furnishing of the relevant annual return, whichever is earlier. Okay. So this is actually like how you write the answer. So when you write the descriptive answers, okay, try to explain the kind of a situation which is asked in the question in the first para. It may be a small para to define the problem. The first step is always to define the exact problem. What is your understanding about it? Then you need to decide that what the provisions, what is the law, what is the compliances they are saying, what we need to kind of do in this given situation. Then you can explain that what is your opinion, considering the problem statement and what is compliance with the regulatory provisions are saying. Then the third para can be a small para, but it can be like connection between the problem and the solution. The last para, again, it can be one line or two lines. It can be a conclusive statement from your side. So conclusion, what is the final opinion? It is like when client is telling you something, you are explaining that this is what you're understanding, that this kind of a problem you are coming ahead with. Then you are saying that this is what law says. What is, as a consultant, my advice is that in the given situation, as per the regulatory requirements, this is what we can do. And then your final conclusion. So to conclude with, this is the solution as per you. This is how you handle a client. This is how you answer the descriptive questions. Eighth, the executive and the non-executive directors. Remember, executive director is somebody who is participating in the daily kind of a routine work. They can be like whole-time directors, they can be managing directors. The non-executive directors are the directors which are not participating in the daily work of the company, operations of the company. So they are just maybe board of directors on the board, coming there only discussing or overall supervising kind of an organization, helping with the policies setting, etc., in the board meeting only. So they are not taking part on day-to-day operations. Executive and non-executive directors have different role and responsibility. While the responsibility of an independent director, who is an independent director? I mean, they are generally the kind of non-executive director, with a simple difference that a non-executive director can be someone who is related to, let us suppose, the promoters, founders, to kind of other board of directors. So a non-executive director can be that person as well. For independent directors, we need to have somebody who is independent to the other promoters, founders, other directors. That's a difference. But they are of the nature of non-executive director. With reference to the financial reporting and approval as part of an audit committee requires a special mention. Explain with examples. So the question is asking the roles of executive, non-executive, and then the independent directors in a company. Okay. So I've already explained, but I'll also quickly go through with the answer that is given to give you more better clarities. Different roles of executive and non-executive directors. The board of directors may comprise both executive and non-executive directors. The executive directors are responsible for managing different business operations. A whole-time director and managing director are covered under this category. In contrast, the non-executive directors participate through board meetings in discussions related to formulation of policies from the efficient management of the business. So they are not getting involved with the daily routine work, operational work. Professional directors, maybe a nominee directors, are included in this category. Professional directors may be somebody, let us suppose, a subject matter expert. So we have appointed somebody because they are industry experts, or let us suppose a particular subject matter expert. So they are not as active as that of the executive directors, and then they are held liable only if they knowingly consented for wrongful acts, right? Because they don't know what is going on in the company on operational grounds, so they can only be held responsible if if the we are able to establish that it was a professional negligence, or they have done this, I mean, intentionally a wrongful act has been done. So what is the responsibility of independent directors with reference to financial reporting and approval as part of the audit committee? Every audit committee shall, in accordance with the terms, these are the kind of the responsibilities. A recommendation for appointment, remuneration, and terms of appointment of auditors of the company. Review and monitor of the auditor's independence and effectiveness. Examination of the financial statements and the audit report. Evaluation of internal financial controls. It means, I mean, statutory auditor as well as internal auditors. Valuation of undertaking of assets or assets of the company wherever it is necessary, approval or any subsequent modification of the transactions of the company with related parties, scrutiny of intercorporate loans, monitoring the end use of the funds. I mean, these are very key kind of decisions. So independent directors can be involved in all the key decisions of the company. The independent director is a person of integrity and possesses relevant expertise and experience in one or more field of finance, law, management, sales, marketing, administration, research, corporate governance, technical operations, or other disciplines related to the company's business. Majority of the members being an independent directors in the audit committee leads to promote the principles of corporate governance by enabling disclosures, transparency, and accountability of the company. All the aforementioned transactions have a critical impact with reference to the financial reporting. That's what I'm saying. Very important and critical transactions are there where the independent directors will be involved. Accordingly, the independent directors, in their capacity as members of the audit committee, play a very key role. Okay. So this is the difference between the executive, non-executive, and independent directors, and that is how you write the answer, a kind of solution. Okay, so with this, we have come to an end for our first case study. Now we'll be taking 15-20 minutes of a break, and we can join back maybe quarter past 8, है ना, 8:15, which is 8:15 बजे. So we'll connect again and we will continue with our second case study. So see you soon. Team, we can announce a break. So, welcome back, everyone, and we are going to our second case study. The second case study is again about another chartered accountancy firm, and now we have two partners of this firm known as Apara and Sampad. So, Apara and Sampad, they both completed their articleship training from a reputed CA firm in Chennai. Both were good in studies, and after qualifying, they decided to become partners in profession and partners in life. And I mean, this is a very unique kind of a situation, but this is very true as well. I mean, it happens like on the journey of becoming a chartered accountant, you will meet your professional partners and at times your life partners as well. So, in this equation, in this situation, in this case study, we can see that Apra and Sampad, they completed their articleship from a reputed firm, and then finally they got married as well. Sampad was very proficient in interpretation of laws and direct taxation, while Apra was good in indirect taxation, audit, and financial reporting. At times, this is a kind of a question which I am being generally facing by the students at your level, that whether one service line or one domain is better, like the top organizations, when you do your articleship with them, they provide you an exposure of one kind of a service line. While when you are working with other firms, maybe mediocre or small firms, you may have an opportunity to work in multiple domains or service lines. And this is a very common kind of a question, that exposure into one service line is better or exposure into multiple service lines is better. I mean, it is generally dependent on the situation. I mean, it's never about the service line, it's about you in that service line. So, what you will do with those kind of opportunities, how you will excel, how you will grow in these kind of environment is what will bring future success to you. But yes, overall, I mean, obviously the perceptions may be different, but what I believe is having specialization in one domain will definitely make you a professional, make you a kind of a somebody more reliable into that particular domain. So that is better. Like in the given equation, Sampath is very proficient with direct taxation and laws, while Apra is very good with the audit and financial reporting, audit or indirect taxation. So they make a good kind of partnership form together, because now they have multiple service lines exposure. They have knowledge, they have experience of multiple service lines. They started their firm at Kochi in the name of Apara Sampad and Company Chartered Accountants. Currently, they have a well established practice spread across various spheres, including FEMA, corporate law, international taxation, valuation, etc. So, these are the service lines or domains in which they are operating. Apra and Sampad had in the past done few engagements for Greenly Limited. Ramnik, the Vice President Finance of Greenly Limited, invited Apra and Sampad for a meeting along with finance team. So you see, there were a couple of engagements that they were already a part of, and now there is a finance team. They invited Apra and Sampad. I mean, this president invited, vice president invited to meet with the finance team, Apra and Sampad. So again, as I mentioned, when a client is inviting, the client might be having an opportunity. The problems of the clients, the challenges of the clients are considered opportunities for us as a consultant, right? So the bigger, the complex the kind of a situation will be, the problem will be, the better kind of a chances of your, uh, I mean, I will say valuing that kind of an opportunity. The bigger the opportunity will be, in simple words. Okay. So this is what is happening now. You are there to meet the finance team, internal auditors and tax consultants. I mean, all everyone is together in the room. As Greenly Limited was a coveted client for the firm, Apara and Sampad attended the meeting. So it's an important client. So they both attended the meeting. During the meeting, Ramnik discussed the following points. So now Ramnik, who is the vice president of the Greenly Limited, now he is discussing couple of points. Okay, it means he is going through certain situations, certain challenges, and then he is discussing into that meeting room where internal auditors, tax consultants, finance team is sitting, and our chartered accountancy firms, two partners who were proficient in various service lines, they are also sitting in that meeting room. And now the discussion is started. So Greenly Limited is one of the leading laundry in Delhi for cleaning of suits. they are charging how much? 625 rupees per suit. The price has been derived by the laundry as under. So they have a calculation as well, that how this 625 rupees is calculated. So they are saying, so to launder, to laundry each suit, they need the cleaning material for 37 rupees. They need to have a labor as well who will be cleaning that suit, and this labor generally takes 3 hours to clean the suit, and each hour the labor is being paid for 60 rupees. This is what is about a labor cost. So they have a material cost, they have labor cost, and then there are some variable overheads which can be over and above the cleaning material or the labor, because they are the direct kind of a cost, but some variable overhead which may be, let us suppose, the laundry machine. When the machine is running for these 3 hours, let us suppose labor is running this machine, it may be having some kind of electricity cost. I'm just giving you some examples. So that can be a variable overhead. I mean, this will be there per suit, say 80 rupees. And then we have some fixed overheads, which is 3 hours, because one suit is taking 3 hours. So they have come up with a matrix, a kind of a parameter that they will allocate the fixed overheads in number of hours. Okay. So they are saying like 3 hours, and then there's this 20 hours, 20 rupees per hour is the rate. So 60 rupees of fixed overhead is there. This can be considered like an activity based costing, right? So this is a very good example. Rather than allocating fixed overheads on a kind of a common thing, what we can definitely do, that we can identify the activities on which these fixed overheads can be allocated. In our situation, we have allocated fixed overheads on the basis of the available hours, man hours that we have. So since this one suit is costing 3 hours, we have a fixed overhead which is getting incurred at 20 rupees per hour. So 60 rupees of the cost. So they are saying 60 plus 80 plus 180 plus 37, and then 75% is the total margin. Now, the company is known for timely delivery and quality services, and hence it charges premium for its services. So they are having a good name in the market, and for that they are charging a premium. The labor charges have been derived by dividing the total salary paid by the total number of hours available. So these labor charges that they are getting is 60. They are getting is how the total amount they are paying to the labor and the number of hours the labor is available. So let us suppose, just for the ease of calculation, if a labor is getting paid 15,000 rupees per month, and they are available, let us suppose, for 150 hours, that means the labor cost is 100 rupees per hour. So that's how they have calculated. Variable overheads depend on the number of suits cleaned, while fixed overheads rate is derived at by dividing the total cost of all related expenses by the number of labor hours available. We have seen this. I mean, I already discussed 20 rupees per hour means. So if the variable heads overheads, like I gave you an example of, let us suppose, a washing machine being run, and every time I'm cleaning one suit, it's let us suppose it is taking 3 hours, and the electricity cost of those 3 hours can be in variable overhead, which is I'm charging basically as a cost on the particular suit. Simultaneously, there might be a fixed overhead which can be the rent or anything else like this. This can also be, we need to kind of put this cost as well on the suits. So what we have done actually to put it on the suits, we know that there are 3 hours that I'm taking to clean one suit. So I have calculated the total available hours of labor. So let us suppose in my example, I gave you an example of 150 hours. For a month, a labor is available. But if I'm having, let us suppose, 10 labors, then I have 1500 labor hours available. And let us suppose my rent is 1,50,000 rupees. Then per hour, the fixed overhead will be 1,50,000 rupees divided by 1,500 hours that are available. That is how the fixed overhead is calculated. Fixed overhead, they are generally including office rent and administrative salary. So there may be a reception guy as well that is there. So we are putting it like a administrative salary as well. A conference is being held in the Delhi on account of 2020. And a hotel is also required to provide premium laundry services for which the company has been approached for its lowest quotes. So now there is a conference, and the company, because they have a good name in the market, the brand recognition is there. So they have been asked to provide a quote, the lowest possible quote for a conference that is going to held. Now in that conference, the company is expecting that they may get 150 suits in one go, while they are charging in the regular kind of a situation, they are charging 625 rupees per suit on priority basis. The company has sufficient material of cleaning in stock even for this additional special order. So the company is saying that they have cleaning material available with them. I mean, this 37 rupees cost will not change. So what happens at times, we are getting bulk orders, we're getting immediate orders, and at times because of the short time or quick turnaround time, we have to buy the cleaning material which may not be from the regular vendor. So it can increase your cost. So they are saying that in this given situation, our cost will not increase because we have sufficient cleaning material available. So that's a good news. It is believed that 55% of the additional work can be done in normal working hours. It means that my labor, so there is some bandwidth, some availability is also there. It means 55% of the hours that are required. So if 150 suits will be there, 150 into 3, 450 hours will be needed for my to complete this particular work. Now for out of this 450 hours, I can still have 55% of the hours from the normal working hours. It means those 55% of 450 hours will be paid at 60 rupees. But to have more kind of to complete this bulk order, I need to ask my labor to work on extended hours or maybe over weekends and all those things. Those extended hours that I'm asking them to work, they are not being paid with the normal rate. There is a higher rate for those extended hours. So it is believed that 55% of the additional work can be done in normal working hours, and for the rest of the work, overtime by some of the employees will be required. Overtime hours are paid at one and one half of the normal hourly rate. So it means they are paid at 60 multiplied by 1.5, which is 90 rupees per hour. Okay, the remaining hours. So, I mean, obviously, the question will ask you to prepare a quote because this is the lowest quote that you need to offer. So the question will definitely ask you that what is the mm, uh, minimum to minimum quote that can be there for this kind of a contract proposal. So this is the first situation. The second situation is that Greenly Limited is having 3 years average profit of rupees 10 crores. And during the financial year 23-24, and it is required to spend on account of corporate social responsibility CSR. It has incurred this expenditure through an NGO which is named as Green Foundation. Okay. So now this is the CSR, basically a contribution. So the company was having more than 3 years of average profit as 10 crore rupees, and since they have to comply with the CSR provisions, so they are incurring the expenditure on CSR with the name of an NGO named as Green Foundation. The third point is basically the company purchased a land. Now there is a land which is purchased by the company in the city outskirts on 1st of August 2018 for a consideration of rupees 1.25 crores to construct a factory for which the stamp duty valuation was 1.75. So there is a gap. 1.25 is the building's consideration, while the stamp value says it is 1.75. It means we have paid less than our stamp duty as well. Okay, valuation. Later, management decided to sell this land to fund the business diversification. So now the company was thinking initially that they will buy a land and then they will construct a factory over it. But after a couple of years, now they are thinking to go into the business and diversify their business. So the funds that are stuck with that kind of a land where they were planning to build a factory, they think it is a time to sell that land and utilize those kind of proceeds for diversifying our business. Okay, so they are thinking the business can give us better return, and instead of constructing a building, we can definitely purchase or diversify our business to other segments. Now, on 1st August 23, the land on city outskirt was sold for 5 crores. To diversify their business objectives, what they have done, they have sold it. After holding it for 5 years, they have now sold it in for 5 crores. The stamp duty valuation was 5.4 crores. Cost inflation index for FY 18-19 and 23 is for given, right? So in this equation, you can clearly see that since this question is related to 2023 and 24 and those kind of situations are there, that's why this cost inflation index and etc. is given, right? Otherwise, if you would like to go it with the current kind of a scenario, then maybe this cost inflation index, even if it is given in the question, it is at times given to confuse you, so that you can conclude it over it, to you can calculate over it. Simultaneously, you also need to see, because now when the indexation benefits are not there, you need to see whether the company, the client that you are dealing with, whether it is a company or it is an HUF or the individuals. Because for HUF and individuals, still there is a kind of a this kind of a benefit is available, that they can calculate using the long-term capital gain, using both the methods, with indexation and without indexation, with a different tax rate, and then they can decide that which one method they want to go ahead. But for corporates, that option is also not available. Okay. So even though the answer, the solution which is given for this case study, that will be as per the provisions of 23 and 24. You have to be very, very careful, right? I mean, while going through the case study digests, because these kind of situations you may encounter, especially for the tax provisions where, I mean, frequent amendments are happening. So those kind of situations you need to be careful around. But right now in the equation, in the situation, this is a kind of a situation that we are facing. The fourth situation that we are discussing in that boardroom is that ABC LLP, the statutory auditor of Greenly Limited, resigned. So now the statutory auditors have resigned, and then they have mentioned that there is a personal reason to resign. And Apra Sampan and Company was proposed to be appointed as the subsequent auditors of the company by the board of directors. So board of directors are saying that we will propose Apara Sampan to replace the previous auditors. The previous auditors have resigned. Remember, their tenure is not completed. It is not that out of rotation they have been rotated out. It is like they have resigned. So resigning is a big thing. Now, as an auditor, when you are getting appointed, you need to take a clearance from the previous auditor as well. So it means now you have to go back and check with them what was the reason for resignation. So this was a great opportunity for both Apra and Sampath, as they were trying to get some business from Greenly Limited. So they believe that this is a good opportunity. At least they will be given, they are being appointed as the auditor, and then slowly they will build better relationships. And then even if they will rotate out in a couple of years, they may get other business, right, from the same company on the basis of the relationship they are going to build. So they are very happy about it. The next situation is basically that after the meeting was completed, now we have concluded the meeting is completed now. Ramnik met Sampath. So Ramnik was the vice president. Let us suppose over a high tea, over a, while having a sip or having an informal discussion. This is very common in these kind of equations. So when meeting is completed, it is not like that everyone immediately they are leaving. So they may stay back for, like, let us suppose for a high tea or for a quick lunch or something. So while over those kind of maybe drinks, coffee, teas, or probably I'll say lunches, dinners, etc., there can be a lot of personal discussions as well. So in the given situation, Ramnik, who met Sampan, they are having a casual discussion, and then he is telling that his daughter Sweetie was pursuing post graduation from Stanford, and he has remitted 50,000 USD, which is 40 lakhs, for her maintenance abroad under a liberalized remittance scheme, which is known as LRS as well. Thankfully, he did not have to do any other remittance during the year. So this is the only remittance that Ramnik has done. So Sampath should be advising that how this particular transaction will be taken care. Okay. And this is just, remember, this was not the part of the agenda. This is just an informal discussion that they are having over a tea after the meeting. So I mean, and to be very honest, this can be like an additional business, but it is not for the company. It is for an individual, Ramnik. The next situation is, while Sampath was busy in a discussion with Ramnik, CA Money, the internal audit, remember, internal auditor, tax consultant, statutory auditors, all were there. So CA Money, who was the internal auditor of Greenly Limited, and he was a close friend of Apara as well, approached her for a quick chat. Money informed Apara that his practice was going good and he was appointed as a statutory auditor for a listed company. So it's again an informal chat where Money told uh, Apra, because they both are friends, that I am the internal auditor for the Greenly Limited, which is the company under discussion. But I am right now appointed as the statutory audit for a listed company, which is a big achievement for him. Lately, he has been busy finalizing the audit letter, communicating the key points of audit to those charged with governance and audit committee. So, recently he was very busy in doing all this. And again, this is another very common kind of a activity or a procedure that we perform when you're appointed as an auditor. Okay. So now this is the a kind of a case study whereby you are right now representing Apra Sampadan company and you have a kind of a company which is known as Greenly Limited, and there is a meeting that you attended whereby there are some formal discussions happened for company, and then there are a couple of informal discussions, like one with the vice president about the remittances that he has made to his daughter in abroad, and the second was about Mr. Money, who is the internal auditor of the company. Okay, and he explained, he discussed with you that there is a listed company whereby he is appointed as an auditor. Okay, so we can move to the same way, like in the I mentioned in the first case study as well. The first portion is multiple choice questions, and the second part is the descriptive questions. So we will start with multiple choice questions. We will discuss this solution of those questions, and then we will move to the descriptive questions to see how to write descriptive solutions when the question will be you will be attempting these kind of case studies in the exams. Okay, perfect. So moving to the multiple choice questions. Here are the multiple choice questions. The first question is basically from the remittance of rupees 40 lakhs. So Ramnik has made remittance. Okay, the authorized dealer. Now you see, authorized dealer is can be a bank, can be another dealer who is authorized to make such transactions. So Ramnik must have deposited this 40 lakh rupees given to the authorized dealer or the bank, and then bank must have remitted. So let us suppose I have deposited 40 lakh rupees of INR, and the bank has remitted. They have collected 40 lakhs of INR and let us suppose remitted equivalent dollars after their bank charges and all to the daughter of Ramnik. But in this equation, since this authorized dealer is there and these kind of transactions are happening, government wants to take a control. They wants to understand that who is remitting this kind of an amount outside India. So they have come up with uh, a kind of a situation which is known as tax at source, collection of tax at source, or in simple words, TCS. While generally we have heard a lot about the tax deducted at source, which is TDS, TCS is also another way through which the government takes a control over some high value transactions. So government has advised like these authorized dealers and all, remember they are not making payments. So if you are making a payment and then you are deducting the amount, then it is known as TDS, right? But when you are collecting the payment and then you are processing it and then you are deducting some amount and depositing with the government, this is known as tax collected at source. So you have collected amount from 40 lakh from Ramnik, and you have deducted some TCS, and you have remittance tax while you will be filing your final income tax return. Okay. So what is the amount that will be collected as a TCS is something that we need to understand in this question. So government is saying, like earlier when this question was framed, it was I think 7 lakh rupees of a limit that if you are paid with the government. Nowadays the limit has increased to 10 lakhs. So again, you have to be again very careful, because you see the best part is when you will be attempting for the IBS, you can have access to the recent updated material. You can carry that material along with you. Really take your time, do your own research and come up with the final conclusion. And clients do appreciate the final kind of a situation. With only one difference, because yes, obviously, you will have very limited time and you have multiple clients. I mean, I just can't imagine a practical situation if, let us suppose, 4 5 these case studies, like 4 5 corporates I need to deal with in like 3 hours of a time. So it will become very challenging, right? And it's not only, to be very honest, meeting these guys and noting down their problems to come back later to them, but in the examination hall you have to solve them, you have to kind of advise them that what is the right solution. So it is obviously a very big challenge and it needs practice. That's why for IBS exam, practice is the key. You need to do a lot of practice, okay, so that you can excel, you can become pro in these kind of case study situations, scenarios. So over here, as I mentioned, this 5% will be deducted as TCS, but that 5% will be above 7 lakhs in this kind of a situation. Otherwise, the limit is now 10 lakhs. So we will see the what is the answer. The answer is basically that second provision, it says like we need to deduct 5% TCS on the amount which is over and above 7 lakhs. So we remitted 40 lakhs. This is minus 7 lakhs. It is 33 lakhs. So we need to deduct TCS 5% on 33 lakhs and the amount will come as 1.65 lakhs. Okay. So this is what we need to do in this given situation. Now we will move to the second part. Second says that the capital gain arising on sale of land at city outskirts by the company would be, again, as I told you, in this equation, indexation, etc. is given. This question belongs to 2024. So be very careful while you are answering from the current scenario. Since it is a corporate, we will not have any option of calculating the LTCG with the indexation benefit and all. So we have to ignore the indexation benefit and need to calculate the LTCG accordingly in the recent scenario. Okay. But the question over here, a very important aspect of the question is that is still continuing, that the difference between the stamp duty and the amount which you have paid, the consideration cannot be more than 10%. So remember, if it is then more than 10%, then remember the higher the amount, the higher of the amount will be considered as the actual sale proceeds and the LTCG will be calculated accordingly. Okay. So working will be as under. So we have total consideration of 5 crores. The index cost 1.75 was the cost. You see 1.75, it is more than 10% of the consideration that we have paid. We paid only 1.25 crores. Okay. While 1.75 crores. So this is more than 10%. So that's why we have considered 1.75. This will, the same thing will happen over here as well, that 5 crores and 5.54 crores. In this equation, it is not more than 10 crores, and that's 10%, sorry, and that's why we are considering 5 crore as the consideration. So 5 minus 1.75 into indexation 2.175, and this is the how the rate will be calculated. And the question also says, as the variation at the time of the sale is less than 110%, the actual consideration will be taken. So we have taken the actual consideration. Otherwise, we would have taken the, if let us suppose it would have been more than 5.5 crores, okay, the stamp duty valuation, then that amount would have been considered as a consideration. Now, the next question is about UDIN. I mean, UDIN is also a very good, very fantastic kind of a mechanism that is introduced by ICAI. Before UDIN, I can recall when I was studying and when I was pursuing chartered accountancy, there was a very big problem that people used to sign as a chartered accountant without being or having a chartered accountancy degree. I mean, they are just signing, faking like they are chartered accountant. So UDIN is trying to control all those unauthorized or all those fake signings by the people who are not chartered accountants. So you have to have a unique number to identify the document where the signature of a chartered accountant is there, and this is the UDIN, basically unique document identification number. So our question is saying, while drafting audit letter communicating the key points of audit to those charged with governance and the audit committee, Mani was thinking if he needs to generate a unique document identification number. Okay. So the options are A, yes, separate UDINs are to be generated for the statutory report and letters to those charged with governance. B is no, UDIN is required only for all certificates, reports, and all other audit and assurance attestation functions, and not for any letters, etc. Making communication. So remember, I am again telling you, wherever you will be doing sign, so each sign will have a unique number. I mean, you can consider this like this. So in the situation of letters and all, I mean, we are having so many communications with our clients on daily basis. If we will have to generate a UDIN for everything, I mean, it will create a lot of mess. So remember, in this situation, there is no requirement to have a UDIN for the communication, general communication that you are having. So the reason is UTIN is required only for all certificates, all audit reports, and all other audit and assurance attestation functions, and not for any letters making communication. Okay. Otherwise, you will end up creating multiple UTINs for the same kind of a client every day without having any certification or attestation. I mean, every communication that you will be sending to the client will need UTIN. So practically, it's not possible. Only the final reports, like you're doing a lot of communications, but the final audit report when you will be signing, you have to have an UTIN, so that when this client go in the open market and wants to show, or the stakeholder wants to verify that the sign or the signature is original, they can go through and check it. This is known as UTIN. The next is basically, which of the following statement is likely to be correct regarding compliances to be made by Greenly Limited? So the first option is, it is required to file CSR1 as an independent form on MCA. Remember, CSR1 is for registration, while CSR2 is for the action, for the content, for the activities, everything, the amount that you are spending. So in the given situation, now the company has already decided that there is a NGO that they are going ahead with, and then they are doing CSR activities. So how are they spending that amount? That explanation will be given in the CSR2. They are not asking for the registration. Okay. So the correct answer is B. Okay. It is required to file CSR2 as an independent form on MCA portal. Reason: CSR2 form is mandatory in CSR reporting. It is an independent form. Okay, this is an independent form. CSR1 relates to registration of entities, NGOs who wish to undertake CSR activities and want to get funding from companies on this account. So one is basically for registration, two is for reporting. Okay. We can move to the next question. The next question is, during the conclusion of the audit, Apara was thinking if she is required to report the fact of resignation by the previous auditor. So now in this situation, you see the Apara is appointed as the new auditors. The previous auditor has not rotated out. Remember this. They have resigned. Okay. So Apara is saying, should we mention in our audit report anywhere that they have resigned? The answer is yes. There is a specific requirement under CARO whereby they need to report. Even it says that they need to consider the issues that were raised by the previous auditor. So the first is the correct answer, because you see in the first it is clearly mentioned that yes, as per the CARO, Apara Sampad and Company should report the resignation of ABC LLP and state if the firm has taken into consideration the issues or objections raised by the ABC LLP. If somebody is resigning, there might be some important concerns or issues. And just because they are resigning does not mean that the new auditor or the upcoming auditor will not take care of those issues. The law is very clear that if you are succeeding auditor, you have to address the issues raised by the previous auditor. Okay. And then you need to report it under the CARO as well. Great. After this, we are moving to the next question. This is the descriptive question. We are starting with the descriptive questions. So it says like Apara wants to draw the attention of the readers of the financial statements by way of an EOM, which is the emphasis of matter paragraph in the audit report. So EOM does not mean that it is a qualification. We are not qualifying our report. We are just want to highlight an important factor that this is what is happening inside the company. So if you really want to highlight something which is really important, you can use emphasis of matter paragraph. It is EOM instead of qualifying your report. The report can still be unqualified, but with an EOM paragraph in the audit report issued by them, indicating the fact of their appointment due to resignation of the existing auditor. Explain the circumstances in which an auditor may consider to include an EOM paragraphs in their audit report. Is the approach of a para proper? You see, if these kind of questions are there in the descriptive, I mean, it is comparatively, I will say, easy to attempt in the examination, right? And the reason is because you can, when you will try to find, I mean, like what are the various situations when EUM can be issued and all, you can easily reach out to your books, to the content that you are carrying, and you can easily find the kind of exact answer over there. So this is not like a complex situation. It is like simply you can reach out to the right content and then you can write the answer. So comparatively they are easy, they are very easy, बहुत आसान. But otherwise, I mean, the complexities of the questions are when they are asking the questions or which the content or the answers are not apparently available in the content that you will be carrying, because in those situations you need to do calculations, you need to do some assessment, some analysis, and then you need to conclude. Okay. So what are the, so EOM, as I mentioned, that these kind of situations, the resignation and appointment, it is already a requirement under CARO. Okay. So you will be providing a CARO's report in which you will be mentioning why they resigned and whether you have taken care of the issues that they were raising. Everything will be there already, and that CARO will be a part of your audit report. So there is no need to write down the same thing which you are writing under the CARO and the EOM. So while EOM can be used for certain important matters, resignation of the previous auditor is not the right content or I mean right purpose of EOM, because there is already a clause in the CARO which you will be explaining. But let's go through quickly that what are the various circumstances under which the EOM can be issued. So it says like emphasis of matter paragraph is a paragraph included in the auditor's report that refers to matters appropriately presented or disclosed in the financial statements. That in the auditor's judgment is of such importance that it is fundamental to users' understanding of the financial statements. Remember, they are already disclosed and presented, that too appropriately, right? It is not a qualification. I'm again saying, if it is not appropriately presented and you want to highlight, then it is not EOM, it is a qualification. Remember this. Okay. So it's only when things are appropriately presented, but as an auditor, you think this information may be very important for the users, readers of the financial statements, then you can add EOMs. So the law has given some circumstances as well in which the EOM can be added. Okay, these some circumstances, they are here. When a financial reporting framework prescribed by law or regulations would be unacceptable, but for the fact that it is prescribed by the law or the regulations. In this situation, an EOM can be, you can draw the attention of the users towards this to alert users that the financial statements are prepared in accordance with a special purpose framework. So if you want to draw their attention that the financial statements are correct, but they are being prepared in accordance to a special purpose framework. When facts become known to the auditor after the date of the auditor's report, and the auditor provides a new or amended audit reports, subsequent events, right? So if you are doing that, then EOM can explain that why I have a subsequent or this additional or amended report is there. That can happen. And uncertainty relating to the future outcome of exceptional litigation or regulatory actions. I mean, it is an important issue because you see, when we are talking about the litigations or regulatory actions, the management may come across and then they can say that we will either not recognize any liability. If you will try to fight with them practically, they may conclude that a contingent liability is something that they are ready to book in the financial statements. Then you will be pushing them towards provisions, from a contingent liability to provisions. And I mean, there will be a lot of fight. And then, I mean, the final liability which can be there. So, I mean, there are various stages, but if you come across like there is a litigation issue or regulatory action is going on, the outcome is you are not aware about, and you just want to draw the attention of the users that please go through this paragraph, or just understand that this is the current situation as an auditor, so that later on, when if anything adverse happens, I mean, it should not be like the auditor was not aware, or auditor has not, uh, I mean, paid attention or included this as an EOM. The next can be a significant subsequent event that occurs between the date of the financial statements and the date of the auditor's report. Practically, if you see, and I'm being very honest with you, generally what happens, the financial statements date, I mean, we are talking about this confusion. When you read a question, you may create this confusion in your mind that generally the financial statements date is the date on which the financial statements are signed by the directors and all. Remember this, that when we are talking about this, we are talking about the date of financial statements means the date of balance sheet, the year end date, and then the date on which you are issuing the audit report. So if there is any significant subsequent event happened, but let us suppose the indications or the uh, I mean, a kind of, there was no nothing related to the previous year, so you are not able to adjust the books in the previous year, but this is still a significant event which you want to mention or to highlight to the users of the financial statement. So you can go through an EOM in the audit report. Early applications were permitted of a new accounting standard. This is also what you can do. A major catastrophe that has had or continues to have a significant effect on the entity's financial positions. So that is also you can add in EOM. Now, you see, these are a couple of circumstances, but what is mentioned over here is clearly that this situation of resignation of an auditor is not covered in the emphasis of meta paragraph. The reason is simple, because it is already there as a part of the cargo. So you mentioned this particular situation over there. Okay. The next thing is, Sampad discussed with Apara and thought that it would be handy and easy to explain the clients the details of LRS, which we explained, if they have standard document. Draft a note covering various aspects of LRS. Again, a simple question from an IBS perspective, because you know these kind of things you can directly reach out to the content that you are carrying. I mean, the only thing that you need is a little luck that you are able to carry that content which explains LRS over there in the examination hall. But if it is there, you can simply go through the LRS and then you can write down. So various aspects of LRS is, the LRS is part of for FEMA basically, which lays down the guidelines of forward of outward remittance from India. So LRS says it applies to all residents. It allows freely permit of 2.5 lakh dollars. I mean, obviously there are some amendments, some changes at a later stage. So when you will be going through or writing the answers, be careful that you are writing the updated provisions. It can be of permissible current. This is inclusive of foreign exchange facility in case of remitter being a minor, and then the remittance under the scheme can be consolidated in respect of family members subject to individual family members complying with its terms. Exception is clubbing is not permitted by other family members for capital accounts. So it is not like, you know, like if you're thinking 2.5 lakh is the limit and you want to send 5 lakh dollars, so you have three members in the family and then you are, each one of you are remitting separately. Okay, I mean in that provisions this can be clubbed, and the limit can still be like 2.5 lakhs dollars after clubbing. But it is not permitted. Clubbing is not permitted if it is capital account transactions. Okay, like opening a bank account, investment, purchase of product, then clubbing will not happen. But if it is a revenue nature transaction, clubbing may happen. Okay. The next and the last question is, Ramnik requests you to compute the incremental cost of Greenly Limited, which may be taken as a base for quoting the minimum price. Okay. Now remember, we had a situation 150 suits of an order was there. We were expecting that this can come to us, and we have like couple of things already given in the question, like the material is sufficient, so 37 will not change. Only the labor cost is a concern, which is a major concern for us. We have only 55% of the labor available, and the remaining 45% of the labor will be given 1.5 times of the normal working rate. So we need to include this all in the proposal. So Greenly Limited can use the incremental cost numbers for pricing the rush order. The minimum price that firm would charge is 238.50 per suit, which is 35775 divided by 150. How they have calculated 35,775? This is the calculation. The price is well below normal price. Just remember, normal price is 625 and our price quote is 240 rupees. So this is way below. Okay. Now, how they have calculated this? Cleaning material 37 rupees because we have sufficiently available with us. So 37 into 150 suits. Okay. This is the amount. Labor, as I mentioned, 150 hours will be there. And then this 150 hours of labor multiplied by 3 because 3 hours per suit. So 450 hours will be there multiplied by 45. It means the remaining additional incremental cost multiplied by 60 into 1.5, which is 18 to 25. Here is a very important question that you need to note, that we are not charging that 55% of the cost. The reason is because that is already an idle capacity that we have. I mean, if we need to calculate something which is bare minimum, then this 238 is bare minimum. But if you really want to calculate that, what would have been the normal price in this scenario, so you can include that 55% as well. You see, in the open market, generally depending upon the clients and the the competition, you need to see that in which situation you are going to quote this much, or in which situation you can still charge that 55%. If you are charging that 55%, how it will happen that you can quote that 55 after adding that 55% of a labor cost, it will still remain below 625, because what you can do is definitely you can reduce your margin, which was 75%. So you can create a range that if let us suppose that amount comes as 500, you can have that range that I will start quote at 500. If the competition will push us to reduce the price, we will not go below 240 rupees, because if we will go below 240 rupees, I mean, it will be a loss making deal for us, and there is no logic in completing the client work by paying them from out of pocket. I mean, generally, like nowadays, all these quick commerce and all, and this is debatable, but this is what is going on. So we are completing the client's work by paying the client itself, and then we are calling it cost. I mean, customer acquisition cost or whatever you call it. But over here, it is not making any sense to quote anything below 238.50, because this will bring losses, maybe cash losses. We have to incur cash losses. So over here, the variable overheads, they are 150 suits, 80 rupees per suit is the variable overhead, 12,000 rupees is this much. So the incremental cost for this kind of a order is 35,775. We have 150 suits. So this is the incremental cost, right? Remember, this is just the incremental cost. Okay. So I have not added any margin over it. You need to calculate some margin over it as well. And then if you want to add that 55% cost as well, so what will happen? It will create a range for you. Okay, that I can't go below this, and this is from here to here I can make some money. So you have better negotiation power. Okay, but yes, this is a question. So you can definitely, if they are asking what is the minimum below which the losses will incur, so this is the minimum price, and that's why you have not added the profit margin as well. Okay. The the second part of the question says indicate the aspects to be considered for making lowest quote. I mean, I've just discussed, and this all is the what is mentioned over here. So, what we can mention that firms face situations where they are confronted with the opportunity of offering for a one-time special offer. In this situation, only the incremental cost of the undertaking the order should be taken into considerations. Quote should be made at prices that exceeds incremental cost. Okay. However, in decision making, other conditions are equally important. For instance, if this is a one time deal with no prospect of repeat business, then Green Limited might well charge a premium over the normal price. That's what I told you. Over 238, you can charge your 75% or whatever margin you want to keep. Long term implications also matter. I mean, at times, what can happen, you are just quoting a fees lower. I'm not again saying that making losses, but lowest to lowest possible, because you believe there is some level of potential which is there. I mean, let us suppose if we are appointed as an auditor, or we are providing any consultancy services, advisory services to a client, and we believe that that client has a potential, we may get more business. I mean, there was a very big telecom giant for which we were trying to send a quote, and then they had a joint venture with some different name, which is also very popular in the kind of India. So when we wanted to establish some connections with this telecom giant, what we did is actually we started doing the audit of the JV, which was there with the telecom company and another company, at a cost which was pretty low. I will say one of the lowest cost. And the reason was so that we can establish some connections and we can win the this telecom giant in the near future. And this is exactly what happened when the giants auditors were rotated out. We were the first preference because we were already able to establish the connections using that audit of that JV which was there. So this is how you do. So if there are long-term perspectives, you can still go back to quote the lowest. But if the long-term perspectives are not there, you can very well charge premium. But obviously, bulk discount will be there. So the bulk discount can be anything below your current rate. Okay. But you need to have numbers that what is the range till which you can go. And that's why budget is very important. Proposals are very important. The prospect of getting a foot in the door to quote for future businesses would push the price downward. Therefore, Greenly Limited can price based on both the short-term benefits from accepting the orders and the long-run consequences. So, I mean, this totally depends on the Greenly. They can decide, but yes, there is no doubt they can quote them this minimum price without any margin. This is bare minimum. They should charge anything over this. And if they have like the highest of the long term perspectives, let us suppose by establishing the relationship, they will get a lot of such business. So this one time special deal they can give in this price, and then later on they can start charging some amount of premium. I mean, this is how corporate works basically. So instead of coming up with a price, you need to come up with a range. So you need to know that what are the margins you can play around. Okay. So that you can beat your competition, because your competition will also be doing the same thing, right? They will be ready to quote lower than you as soon as they will come to know that there is some kind of safety margin that we are keeping. Okay. So, I mean, a very important kind of a case study. So with this, we have come to an end of the second case study as well. And now I would like to go back to Deepak ji to take it over from me from here. So over to you, Deepak ji.
Thank you, sir, for sharing such valuable insights on approaching IBS case studies with the right mindset and strategic thinking. Thank you so much, sir, for giving us time today from your busy schedules. Now, students, this is time to put forward your questions. If you have any question, you may ask through chat box or through our app. Sir, if you want to leave, you may leave, sir.
Okay. Thank you, Deepak ji, and thank you, the coordination team. I mean, it is really helpful. See you soon again in the another session of IBS. Thanks a lot. Bye, everyone.
Welcome, sir. Students, uh, there is a query about how to approach this paper. Okay, students, for this paper, conceptual understanding is the real game changer. Students, this exam is designed to test your conceptual clarity and application skills, not just your ability to find definitions or formulas. This exam is not about hunting answers from your modules or reference material. It is about conceptual understanding. If you have good conceptual understanding, if you have knowledge how to apply that conceptual understanding in right manner, you can crack this exam in a very easy manner. Student, what this exam truly tests, it is about how well you understand and underlying concepts from each subject, not only core modules but also from self-paced set A and set B. Normally, students ignore both modules, set A and set B. It is a big mistake. Think like a CEO, finance director, auditor. Here you have to analyze complex integrated case scenarios using multidisciplinary thinking. For this, I suggest you to read annual report of listed companies. In annual report, you will find industry analysis, your CARO reporting, your application of standards. If a pharmaceutical company, you will find Ind AS 38. Similarly, corporate governance area, lot of inputs are available, but you have to carefully study annual reports. What you have studied through your modules or your other resources, but its real application you will find through annual reports. In recent examination, there were two case studies. One was based on tea sector and another was based on airlines. You will find the same. You, if you carefully see, you will find the same in real situation. Therefore, I am repeating again and again in each session. Please have a look on annual report. As I just told you, this exam, this exam is not about search and copy. Why relying only on modules or search and copy won't work? You may spend too much time trying to find the exact section or theory in the module, especially when the answer is not word to word. If you don't truly understand why behind the concept, even you find the right term or framework, you may end up with applying it in a wrong context or which will hurt your marks. Even you might one or two questions by copying text, but you will likely to run out of the time for the test. Students, please note that exam is always of standard level. A well prepared student can easily complete the paper in stipulated time. But if you don't know how to apply the open book resources, you will end up with only wastage of your time. You have to understand how to use open book resources. To correct use of open book resources, again conceptual understanding is must. If you are not aware of the concept, you will unable to apply the concept from the module. If you have conceptual understanding, you can easily refer the your resources in exam. I suggest you to focus on understanding of fundamentals of each subject, like how a model works, how financial implication drive business decisions. Use case studies, practice question, and integrated scenarios to test yourself. Students, if you carefully see first case study of recent examination, there was one question related to direct tax. It was question number 1.67, 1.8. This question you cannot solve without application of your finance area as well as from indirect taxation area. How the concepts were integrated in that questions. If you think, if you go in this examination with the knowledge of taxation only, this won't be enough. You have to have knowledge of all subjects. But I suggest you to pick one or two subjects from group 1. For example, you may select FR because this subject not only help you in this examination, but it will also help you when you will become chartered accountant. It will support you throughout your career. Think from that perspective. If you are good in audit, you may do better practice through auditing subject. But at the same time, you have at least at least basic understanding of other subject also. Students, the ICI modules are excellent reference tools. It will give you proper revision, proper clarity. This exam rewards thinking like a professional, not just a student. When you approach it with a mindset of analysis, strategy, you won't just pass, you will stand out. Please go through past year question papers. See how the case studies are integrated. I am repeating again same example. If a company is having international operations, then there is enough chance to get question from your forex chapter from AFM module. At the same time, you may get question from your indirect taxation module, custom duty, because it is having international operation, and international operations can be easily connected with any case study. At the same time, corporate governance portion, related party disclosure, this is very relevant area. You cannot ignore. If a company belongs to pharmaceutical industry, India's 38 is very relevant. Analyze all the case studies from that perspective. Students, one important thing is requirement part. I suggest you to read requirement part very carefully, especially in strategic questions or costing area. For example, if a question asks you to evaluate a firm's supply chain, don't just list the facts or give a one-side answer. You should look at strength like strong IT systems, good relationships with suppliers, and at the same times you have to give weakness also, because evaluation means not only strengths but also weakness. Not only you have to give positives, but you also have to give negatives. You don't need to mention same number of positives or negatives. Sometimes even one strong point or one weak point is enough. A proper evaluation means showing both sides clearly. Also make sure to end answer with proper conclusion, because it may have qualitative insights. For example, the supply chain might look strong, but if there are issues further down the line, the company may still not get full benefits. In such a case, suggesting something like forward integration can help the firm to take more control and improve outcomes. If a question says to assess competitive environment, it means we have to apply Porter's five forces. And they have given in case study there are limited number of suppliers. It means bargaining power of the supplier is very high. If you simply copy theory from the module and paste in your notebook, you won't get any mark. If you write, if you write that bargaining power of supply is high because there are limited number of suppliers, then you will get full marks. This is application. Simply copying pasting won't work because because this paper is based on level 2 and level 3 verbs skill, where you have to calculate, apply, analyze, evaluate, and recommend the solution. It is not about defining, listing, stating. Yani, in other words, it is not about memorization skills. Level 1 verbs normally test at lower levels. Therefore, students, here you have to apply the concepts. Okay. Now, students, I am winding up this session. To all students who joined today, thank you for your active participation and your question. Your interest made the session even more meaningful. Wishing you all the very best in your preparations, and once again a big thanks to Amit sir and to everyone who made this session a success. Session is over. Over.